when you look at the detail of the quarter, what you see is a good, solid quarter. They beat our estimate by about 9 cents at the operating profit line, beat last year by 10 cents at the operating profit line. But below operating profits, you had a big gain from tax. Tax was 18 cents versus our estimate, and significantly more versus last year's number. And when you look at, then we also had an improvement because of interest expense and an improvement because of lower shares. So below the line, we had more of the beat than than above the line. In addition, I think what you see is, as you look at the fourth quarter guidance, which they raised their own guidance, but when you looked at the street consensus, the new guidance is actually below the sales of the street and below the EPS of the street. I think it implies about $2.11, and I think the street is $2.16 or $2.17. We're actually a little bit below that, but above the street consensus. But versus the street consensus, the new guidance implied for the fourth quarter is actually below. So I think all of that has factored into it. There's probably one additional thing that investors are looking at, which is that the traffic is actually decelerated from the second quarter. What I think they are forgetting is the second quarter benefited from a tough first quarter, and you look at the 1.4% traffic improvement in the quarter versus the average of the first half, it's 1.1%. So I think the stock could actually have a little bit of a second U-turn today. So
but you look at
to watch.
The tax improvement clearly helped the bottom line. In terms of comps, looking out a year from now, how much harder is it going to be?
Well, it will be harder. This is what I think investors were worried about. As you saw the stock peak in mid-September and off about 15% going into the print. From there, I think what we've seen is suppliers having a tough third quarter, raising or reducing their own expectations for the fourth quarter. That caused us about a week or so ago to actually lower our own numbers as well. And I think we're all worried about 2019, and we worry that we are seeing some slowing. I think one other factor is the Chinese tariffs are playing, and I think you're seeing a little bit of elevated inventories, and I think you are going to see elevated purchases going into at the end of the fourth quarter. That inventory will be bled off in the first quarter of next year, but I think you will see that happen as well.